Hi there, and you have just tuned in to Dukascopy TV today. I'm Doireann Mc Dermott, and today we're going to have a look at the failure of the euro. Now, over the last year, many have been expecting euro exits, especially from Greece, but nobody has left yet. So, on this topic today, I am joined by Michel Dominice from Dominicé Co, and he's very much anti-euro. Michel, welcome into the studio. Now, why do you think the euro is such a failure?
Well, I think the construction of the euro is relatively naive. First, the eurozone is way too large because it includes economies with a very different degree of competitiveness, and also they don't have simultaneous economic cycles, and this creates a lot of problems to the eurozone. First, we have to bear in mind the fact that before, long time ago, in Europe or in the world, there was one currency, gold, 1 century ago. But during the 20th century, internal prices became more and more rigid due to wages becoming more rigid, due to rents, due to mortgage. All that, most of the middle class used these instruments, and this made internal prices in each country much more rigid. The answer to this increased internal price rigidity was flexible exchange rates, which were gradually introduced but became completely flexible in the 70s. Now, after that, you can see that typically countries of Southern Europe, like Italy, they had a typical cycle in which they were having economic boom with major budget deficits, then high inflation. At some stage when the economic was turning down, they had to devalue against northern currencies, the D-mark typically. And this happened last in '95, just 3 years before the introduction of euro, both in Italy and in Germany. Now, the problem is that this cycle continued exactly as it did in the past, in the sense that Italy continued to have large deficits, to have inflation above the level of Germany, and now Italy desperately needs to devalue something like 20–30% against the D-mark or against Germany, but they cannot because they have the same currency. And now it's a complete trap, because now Italy is definitely uncompetitive. The balance does not come because you don't see a differential of inflation. In fact, normally, if the system would work, you should have Italy having less inflation now than Germany, and this would come back to balance, but it doesn't happen. If you look at inflation across Europe, it's relatively homogeneous. And so we are in a complete deadlock with southern countries having massive recessions, having austerity programs, deep austerity programs, high unemployment, and the big problem is that most of the qualified labor goes to Northern Europe to find jobs, and this creates a long-term impoverishment of Southern Europe, and so the system does not cure itself. Again, you need to devalue urgently Southern Europe.
And Michel, Greece, Spain, Portugal, Cyprus, who do you think will be the very first to leave? And of course, will this create some sort of domino effect?
Well, it's not sure that a problematic country will leave first. Maybe a strong country might decide to leave, because in fact, the proposal to the strong countries is to pay for or to finance, to take the risk of financing, countries which might go bankrupt ultimately. So you might see a strong country or Northern Europe country leaving the euro first, just because they decide to leave the boat because they think they take too much financial risk being into this bad story. Now, but still, it's more likely that one Southern European country leaves just because it goes bankrupt, or because you have a political unrest or just a political decision, an election leading, nationalist countries, parties to take power there and to decide to pull the plug, and because they refuse to accept the conditions, of the eurozone to have austerity programs, etc. So this might happen. Who will be the first, I mean, obviously there is a big danger that possibly Italy goes bankrupt. If Italy does, I think it's a major problem, and I typically see that all the other countries of Southern Europe go bankrupt at the same time, and all these countries must leave together the euro. For the eurozone, it's better if you have an orderly breakdown of the euro with all the countries living together. Mm-hmm. If you have countries leaving one after one the euro, then it's even more challenging to perform this change, this evolution.
So you mentioned maybe a stronger country will leave. Now, would that be Germany, Netherlands?
Typically those ones, or Finland. You have, for example, in Finland, you had the True Finns. It's typically one of these reactive parties against the Europe, because the fear that they take silly risks. They have very sound public finances in Finland, and the Finns do not see why they should pay for the Greeks. So we can understand them, and this type of country might be the first to leave the euro.
Okay, that is quite interesting. I would think Germany. There's been so much kind of debate going on with them, and they're not getting really their praise because of their Merkel and the austerity. They get a lot of criticism, yet they are kind of keeping everybody afloat, and I don't think they're getting the praise for that, but they don't seem to be wanting to leave. But it's interesting that you said that Finland, could be the first. Well,
in fact, Germany, curiously, if you look at opinion polls, the popularity of Europe is going down everywhere. Yeah. But in Germany, Europe remains relatively popular relative to the other countries. So, the Germans look very patient about the euro, about the European construction. I mean, it's a question of how they feel the thing. There are probably historical reasons why it's also. It's difficult to say, but yes, the Germans, obviously Germany, is the key member of the Eurozone, the strongest one. So if the Germans decide to leave the euro, this is certainly the end of the euro, because I don't see the euro continuing without Germany.
I agree. I think Germans are hard workers. Germans, as we say, always have a path, and their path, has been austerity for Europe, but in a way, at least they can see a future and they know what path they want to take. So I would definitely be quite pro Germany. Now, if we take a look at the Baltics, Estonia has actually recently joined the Eurozone. Lithuania and Latvia are also queuing up now to join. Latvia is doing quite well with its harsh austerity. It has come a long way. Now, do you think this is a wise decision for Latvia, or it actually could drag them down?
Well, at least they take a risk, of joining a currency which is very problematic due to, the countries we spoke about in Southern Europe. The key argument for joining the euro for those countries is that they expect easier financing. They say, well, nobody trusts these little currencies. They trust the euro much more. And if you join each country, the Baltics, if they join the euro, they would get easier credit. Fine. But there is a trap with that. The trap is easy money leading to large debt and excess indebtedness, excess economic growth. And it is exactly this argument which led the Greek to join the euro. Maybe the Baltics are not the same as the Greeks. Maybe they will perform a better management of their own economy compared to the Greeks. I hope so. I think so. But still, I wouldn't join the euro because you just take a financial risk of this currency. There is an inflation risk in the euro, because one way out, is certainly to have inflation going out of control, just to avoid a major country like Italy to go bankrupt.
Thank you very much, Michel, for sharing your views on the euro today.
Thank you.
Well, viewers, if you wish to share your views on what's going on, then do join us on our daily webinars. But for now, goodbye.